Assalamualaikum warahmatullahi wabarakatuh. Welcome back to the third video on topic related to regulation of Islamic financial institutions. So in this video, we are going to discuss about the unique characteristics of the Islamic financial institutions regulation. When regulating the Islamic finance industry, the unique characteristics and risk entails in Islamic banking and its products and services need to be carefully examined. This is to ensure that the risk involved in Islamic banking are managed effectively. And these specific risks, such as the Sharia compliance risk, equity investment risk, and also displaced commercial risk. Yeah. So these are a few types of examples of risk which are specific to Islamic finance. And currently, some countries have adopted the Basel standards in their regulatory and supervisory framework for their Islamic banking industries. However, these standards do not adequately address the requirement of Islamic banking operations and transactions. So, therefore, there are some gaps can be identified between the standards which introduced by Basel Committee and also the specific or unique characteristics of Islamic financial institutions. Hence, these gaps should be taken into account, especially with respect to capital treatment. Yeah? With respect to capital treatment and associated risk for the different types of Islamic financial contracts, so that it is truly reflect the features and characteristic of the Sharia contracts which is implemented in the products and services. Yeah? So, as we know that the products and services of Islamic banks are structured based on the rules and principles exist in the Sharia contract itself. Yeah? So that's why it is important to reflect the associated risk related to each and every specific Sharia contracts. For example, in sale contract, they have different kind of risk. In rent, in leasing contracts, in ijara contract, they have different kind of risk exposure to the Islamic banks. Even in mudarabah, in musyarakah, in partnership contracts, it involve a different kind of risk to the Islamic banks. So that's why it is important for the standard setters to understand this kind of contracts and those risks which are associated with the Sharia contracts. While certain products in Islamic finance, such as the restricted investment accounts, by their nature may not attract capital, the IFI need to have a more rigorous process in managing the risk inherent in funds placed under this arrangement. Yeah? So that's why the risk management standards need to specifically address the concerns which exist in the mudarabah or investment accounts. And the Islamic financial institutions can expect to be better regulated and supervised following the adoption of the standards issued by the Islamic Financial Services Board. So in Islamic financial system, so we have one institution named as Islamic Financial Services Board. So basically, the Islamic Financial Services Board harmonized the standards which has been issued by the Basel Committee. And Besides that, the IFSB, Islamic Financial Services Board, they also play important role in facilitating and streamlining of the standards covering cross-border supervision issues, including the home host supervisor issues. Another important issues which is important in setting up the prudent and appropriate minimum capital adequacy requirement for the Islamic financial institutions, iaitu kecukupan modal dalam Islamic financial institutions. So the proposed framework that incorporates such requirement needs to reflect the risk that the Islamic financial institutions undertake. Similarly to what I've mentioned earlier when we discussed about specific risk in each and every Sharia contracts applied in banking products and services. So the similar things here happen in determining the minimum capital adequacy requirement, in order for the proposed framework to be adequate and good. So it should incorporate requirements or risk that Islamic financial undertakes, especially when this, including the profit sharing investment accounts, and any assets components need to reflect the nature of inherent risk in those assets. So in other words, the account holder of an Islamic financial institution relationship is not as straightforward as a debtor-creditor relationship in the conventional banking, but it is rather involves other equity-like risk factors which arise from the investor-entrepreneur relationship, which is underlying the concept of mudarabah, that is inherent in some products and services offered by the Islamic financial institutions. Next, we move on to the Islamic capital markets. The Islamic capital markets could be classified into equity and debt capital markets. So therefore, the regulation differs for both, as each market offers different instruments, different products, and caters for different types of players. In view of the Sharia prohibition against dealing with riba, gambling, trading in impure commodities such as alcohol and pork, so investors and fund managers in Islamic capital market cannot freely buy and sell shares without undertaking a Sharia screening process from time to time. So this is to ensure that the investment portfolio comply with the Sharia rules and regulations. So whenever the fund managers would like to purchase any equity from the Bursa or New York Stock Exchange and whatnot, or any trading platforms, so the fund manager should consider that the company is a company which do not involve in any prohibited elements in Sharia, such as what we have mentioned here: riba, gambling, and trading in impure commodities. So a number of securities regulators, such as in Malaysia we have securities commissions, and also some stock exchange have established and facilitate the Sharia screening process, for in order to make or to facilitate the fund managers to select the investment portfolio. So the screening process involves qualitative and quantitative parameters such as source of income, business activities, and also the financial structures. So in order for the fund managers to be able to identify whether they can invest in a company or not, so the first element is this qualitative elements, which is related to the prohibited elements, and another one is actually a quantitative approach where they measure the receive the item the financial items or financial assets of the company, such as the receivables and also the leveraging, the percentage of leveraging of the companies on its debt. So to mention some of the available Sharia screening process is the DJ Dow Jones Islamic Market Index, S&P Standard and Poor Islamic Index, and the FTSE Islamic Index. And in Malaysia, we also have the Securities Commission screening index. So in the case of Securities Commission in Malaysia, they have their own Sharia Advisory Council, in Securities Commission. So the Sharia Advisory Council of Securities Commission have introduced the Sharia screening process, and the reports, whether reports of all companies which are listed in Bursa Kuala Lumpur is actually screened biannually, meaning in each year they issued two report to inform investors on the latest list of Sharia compliant stocks. So so this helps the investor, the fund managers, to identify whether the stocks that they buy is still a Sharia compliant stocks or not. So in the case of a stock that they bought is delisted from the list of Sharia compliant stocks, so they can, if the stocks is in profitable, compared, they gain profit from that investment, so they need to immediately withdraw the amount of the invested amount in the company. However, if in the case that at the point of the company being delisted from the Sharia compliance stocks, so the companies or the fund managers can still possess or still hold the position and wait for the at least break even of the cost that they have borne in order to purchase that or stocks. So that is the characteristic related to Islamic banking and capital markets. And similarly, in terms of capital regulation, the object, we also have a specific capital regulation for Islamic banks. The objective of capital regulation is basically to promote financial system stability, and it acts as a buffer in the case of shocks, whether it is internal or external case, external issues such as like global financial crisis. So the adequacy of its capital is actually promoting stability and also protect bank from the possible shocks. And during insolvency event, so the loss suffered by depositors and investment account holders can be managed accordingly, as the bank already have adequate capital to cover this kind of loss. So the capital adequacy framework for Islamic financial institutions, according to Basel III, requires bank to hold top quality capital, which is the tier 1 capital, to be more than the equity or retained earnings worth at least 4.5% of the assets. So this is the first requirement of the Basel III in terms of the capital. And number 2, the capital conversion buffer of common equity should be more than 2.5% of the total assets of the banks. And last but not least, the counter-cyclical buffer should be between 0% to 2.5%. So unfortunately, this requirement of Basel III has never been tailored towards specific risks of Islamic financial institutions. So that's why the Islamic Financial Services Board has issued a capital adequacy standard to incorporate such features, the unique features of of Islamic financial institution business in their guideline. Next, we move on to the experience, Malaysian experience in terms of the regulation of Islamic financial institutions. Yeah, as I mentioned in our previous lecture, so in Malaysia we have BNM, Bank Negara Malaysia, and also Securities Commission, which act as the regulatory body, yeah, or supervision body for financial institutions in Malaysia. So basically, the functions of Bank Negara Malaysia is um, function as a role in development of Islamic finance. Yeah, if you can see, the Bank Negara Malaysia have consistently play its role in developing the Islamic finance in Malaysia. It's starting from if you can still remember the timeline that I draw since the first Islamic bank was developed or established in Malaysia until up to the year 2005, we can see how the Bank Negara Malaysia play its role in developing the Islamic financial system in our country. And then the Bank Negara Malaysia is also playing its role as a legal, regulatory, and supervisory infrastructure. So um, in this case, several several important legal or act has been introduced, yeah, in order to assist or to ensure that the Islamic financial system can function effectively. So if you can see, for example, the Central Bank of Malaysia Act 2009, which came into force on 24th November 2009. So in this CBA, Central Bank of Malaysia Act, they mention specifically on the roles of Sharia Advisory Council of Bank Negara Malaysia as the highest authority in deciding any issues related to the Sharia matters in Islamic financial institutions. Yeah. So in section 56, subsection 56(1), the court or it is stated that the court or arbitrator shall take into account the published rulings of BNM's Sharia Advisory Council and refer to any Sharia questions to the SAC for its rulings. So it means that the court or the judge which will before he or she decide on a case pertaining to Sharia Islamic financial institutions products, yeah. So they need to refer their decision. They need to refer to the SAC, Sharia Advisory Council's ruling. Yeah? So that shows the harmonization of the act in order to ensure that there is no potential legal risk in the implementation of Islamic financial system in Malaysia. And the most importantly, in Section 57 of the Central Bank Act, stated that the IFI's ruling of SAC shall be binding on IFIs, and court or arbitrators in these rulings are final. Yeah. So it means that the decision or rulings issued by the SAC of Bank Negara Malaysia is actually binding on the court. Yeah. So that shows the importance of having this kind of legal and regulatory which supports the development of Islamic financial institutions or systems in the country, in Malaysia. And also the Bank Negara Malaysia is actually functioning as strengthening the synergies between financial centers. Yeah. So we have in the case of Malaysia, we have the local financial center and also the international financial system. So by having Bank Negara, which function as the development, the institution or the regulators which help with the synergies between the local and financial system. So it offers the Islamic financial system a wide coverage in terms of its marketability. And it can also attract the higher level of foreign participation in the Malaysian Islamic financial market. So when we have additional source of funds from foreign countries, so it makes help the development of Islamic financial products and services. And besides that, the Bank Negara Malaysia is also plays role in human capital development. If we see, the Bank Negara Malaysia have introduced several institutions of higher learning such as the SIDC. SIDC is under the Securities Commission, and we have ICLIF, ICLIF, which is a leadership and development program for the financial institutions. And we also have FSTEP, the Foundation Center for Foundation that provide training in investment, conventional and Islamic banking, insurance and takaful, especially for fresh graduates. And since 2001, we have the IPFIM, Islamic Banking and Finance Institution, Malaysia. So the focus is on providing training and consultancy to the industry. And in 2006, Bank Negara institutionalized the INCF, International Center for Education in Islamic Finance. So it is a global university in Islamic finance which offer certification and postgraduate studies in Islamic finance. And in order to complete that those institutions, so Bank Negara also have established ISRA, Islamic Sharia Research Academy, International Sharia Research Academy. So it is a center for research in Sharia and Fiqh Muamalat. So these are important things which have been contributed by Bank Negara Malaysia in terms of human capital development. And also, the Bank Negara Malaysia also plays its role as a Sharia governance body. And as I mentioned earlier, in the Central Bank Act of Malaysia in 2009 have elevates the Sharia Advisory Council of Bank Negara Malaysia function to a special stature with unique quasi-judicial powers. So it is the strongest recognition to the role of Sharia governance and Sharia scholars in developing the Islamic finance industry. And then last but not least, the Bank Negara Malaysia is also function as a lender of last resort. So this is similar to the conventional bank as well. So in the case of any problems, especially in a day-to-day management of cash, so if Islamic financial institution face problem in managing their day-to-day cash, so Bank Negara Malaysia have introduced the Islamic interbank market, so that the bank which have surplus of liquidity, surplus of cash, can provide lend their money to the banks which have a deficit in their balance sheet. So that's and the next we move on to the regulatory and supervisory authorities for Islamic finance. So in the case of the Malaysian experience, especially in the term of development, so in term of the Islamic banking system, so we have Islamic banking system, Islamic interbank money market, we have Islamic capital market, Islamic debt market, Islamic equity market, and the takaful industry. So these are the development of institutionalized institutions within the Malaysian Islamic financial system in order to support the development of the Islamic finance as a whole. For example, in the case of Islamic bank, so the function is to mobilize deposits and financing In the case of Islamic interbank money market, so they provide short-term finance for Islamic financial institutions. As I mentioned earlier, that if normally in each day, every day, so each bank will have to close its account, and then they need to see whether their balance sheet is balanced or not. So whether the equity and the liability is balanced or not. So in the case that it is not balanced, so they have to get additional financing, in order to top up that shortfall, so that their account will be balanced. So that's why we have the Islamic interbank money market, to provide the short-term finance for Islamic financial institutions which have shortage of liquidity. And in terms of Islamic capital market, it provides the long-term funds in the form of debt, equity, and capital markets. And then we have Islamic debt market. These are a long-term fund, long-term infrastructure and development projects, to finance the long-term infrastructure and development projects. This is like the sukuk issuance. Yang ini seperti apa nama ni, equity lah, stocks. And then the Islamic equity market capitalizing exercise, so it can be done also, because we already have it under the provision of Securities Commission. And last but not least is the takaful industry. So the takaful industry is actually playing its parts in mitigating risk which exists in the banking system. So it is important to have the takaful industry. In terms of the legal, regulatory and supervisory infrastructure, so we have the main regulatory authorities, which is the Central Bank of Malaysia and also the Securities Commission. And then in terms of the governance, legal governance, in the case of conventional financial system, they are governed under the BAFIA Insurance Act. BAFIA, I think, is repealed by the Central Bank Act of Malaysia 2009. And in the case of Islamic financial system, so previously we have Islamic Banking Act 1983 and also Takaful Act 1984. However, both act has been repealed by the Islamic Financial Services Act in 2013. And then the constituents of Malaysian financial system, in the case in Malaysia we have the dual banking system, whereby the conventional finance and the Islamic finance is operated side by side. So we have the conventional banks, insurance, money market, capital market, and on the side of Islamic finance, we have Islamic banking, takaful, money market, and also Islamic capital market. And these are the rules of Securities Commissions in Malaysia. So the rules of Securities Commission is basically in terms of supervising and monitoring the exchange holding companies, exchanges, clearing houses, and central depositories. And it's also for unit trusts which would like to issue prospectus. So the prospectus should be registered under the Securities Commission. Also, for those companies who would like to issue corporate bonds, so Securities Commission is the approving authority who will approve the overall process of corporate bond issuance. Sukuk, similarly. And then in terms of securities and futures contracts, also it's under the purview of Securities Commission. Take over mergers of companies, unit trust schemes, So Securities Commission will regulate all this process related to takeover mergers of companies, and all licensed persons. But licensed persons means persons who have the authority given by the Securities Commission to market or to market investment products. And then it is a professional associations or market bodies, so they encourage self-regulation of this association. And last but not least is ensuring and promoting a proper conduct of market institution and licensed person. So this is to instill trust to the investors in the country and also to the foreign investors. So in terms of challenges which faced by the Islamic financial institutions, there are at least three challenges that we can mention here. The first is the lack of prudential database. Lack of prudential database here means that lack of prudential database, meaning that the Islamic financial industry is still new compared to the conventional banks. So in terms of business practices, the financial statement, the intents of analysis, the level of information of the stakeholders, so this culture is actually still new and need enhancement, need further enhancement by the Islamic financial institutions, compared to the conventional banking system, which has been operating decades. So they have strong culture of documentation, disclosure, and transparency. So this help the or enable the regulatory and supervisory authorities to develop a comprehensive prudential database for the industry, to make sure that to ensure that the practice of the conventional banks is prudent. So that is the first challenges faced by the Islamic financial system. So when time goes on, so perhaps that this prudential database can be built up upon the experience of the Islamic financial institutions. And then the challenge also can be found in terms of cost of haphazard policy decisions and lack of level playing field. So the international standards for prudential framework in Islamic finance have only been developed in the last few years. So as such, there generally exists a lack of thorough uh, understanding of the complexities of the Islamic financial institutions operations. So this is because these institutions are still subjected to different approaches to regulation and supervision in various jurisdictions, within which they operate. So in some countries, for example, the supervisors have developed specific guidelines for IFIs. So for example, in the case of Malaysia, we have a specific guidelines on how Sharia contracts should be applied in products. We have the policy documents on Murabaha, we have policy documents on Ijara, we have policy documents on Ar-Rahnu. So we have that kind of things. So in contrast, to other countries, they have adopted to generally apply to this institution in the same prudential policies as those they apply in supervising the conventional banks. So this is like what I've mentioned in the first video, I think, where the companies, some countries is actually uh, in, imposing the similar supervision and regulating exercise as what they exercise on the conventional banks. So such differences in the approaches to supervising and regulating the Islamic financial institution have raised concern that compliance with multiple supervisory and regulatory regimes would impose additional cost to Islamic financial institutions. So of course, when they have to follow different kind of regulation and supervision bodies, so of course this they will have to incur additional cost. So it is not good for the business of banking. So this additional cost would slow down the growth of Islamic financial system in growth, and consequently its aspiration to be integrated into the mainstream global financial system, thereby hindering it from realizing its full potential. And last but not least is related to human capital development. If we see a report issued by Deloitte Islamic Finance Knowledge Center in 2010, this is more than 11 years ago. The report is actually 11 years ago, highlights that only 4% of Islamic finance leaders agree that IFIs are properly staffed, and 15% disagree that IFIs are properly staffed, while the remainder 81% feels that the IFIs are staffed with competent workers to a certain extent. So this shows the how in the inadequate development of qualified talents in Islamic finance possess a huge challenge for the industry. Um, uh, but in the case of Malaysia, recently I heard that I had a discussion with one bankers. So he mentioned that in terms of capital development, it's actually currently at the moment um, in the the offerings of position in Islamic finance is actually uh, in a high competition because those who are from the conventional banking system is actually interested to join the Islamic financial institutions. So similarly, each year the universities are graduating students from the Islamic finance or the banking areas, the banking areas. So when the number of uh, potential candidates increase, so it creates more competition in terms of grabbing the position in the Islamic banking and finance industries. So I think that's all three challenges related to the or facing the Islamic financial system currently. So with that, I think we end our session or topic on the regulation of Islamic banking. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.